Welcome to week 3. I have a new space, guys. I'm still trying to figure out the best place to record. Lesson 3, week 2, how to read candlestick charts. I'm just going to dive straight into it. But know that every of our lessons is designed to help you become a better trader. And I'm sure by now you know more than you knew about a week ago. And this one is very particular. This one in particular will help you get even more better knowledge. I'm going to be sharing my charts with us. Recording on the screen. Hold on. Yeah. Okay, for the purpose of this lesson, I'm resetting my chart colors to black, to green and red, because most candle charts have green and red. And I'm sharing from TradingView. This is the application that most traders use in analyzing the market, why MT5 is used to execute. You could analyze on MT5 as well, MetaTrader 5, but this is more seamless, especially when it's on a bigger screen. All right, so let's get down to today's lesson as fast as we can, because I don't like to make these videos long, because I believe the longer they get, the lesser the assimilation, and then let's just get down to business. I'm saying that. All right, so today we are diving into candlestick chart, which is the language of the Forex market, because understanding this will help you see market trends, recognize potential trade opportunities, and then make better decisions. Think of candlesticks as the footprint of money. They tell you what buyers and sellers are doing. The market can make you a buyer, the market can make you a seller. We don't get rigid, we only respond to any opportunities that we see in the charts. Number one is, what is candlestick chart? What is candlestick chart? A candlestick chart is a visual representation of price movement over a certain time. Take note of that. Over a certain time. As you go in the lesson, you understand why I said you should take note of that. Each candlestick shows 4 details. Each candlestick shows these 4 details. The number one is the opening of the price. I'll show you that on the chart in a bit. Open of the price, close of the price, low of the price, and high of the price. The open of the price, simply open, where the time open. If it's in 1 hour, open at this time 1 hour ago, because a complete candle will show the past record of what had happened in the past time that you put it. So if you put a chart on 4 hours, that candle, depending whether it is a blue, it's a red or a green, or bullish or bearish, or up or down candle, there is what we call the open of the price, where the price started on that time frame. There's what we call the close of the price, when that candlestick ended on that time frame, right? Where the price ended on that time frame. Then we have the high price, which is the highest point that the price reached. Now, the price might not close where it's reached, so it can be low, it can be high. So take note of that. Imagine the candle as a battle between buyers and sellers. Whoever wins determines whether the candle will close as a green, which is bullish, or as a red, which is bearish. Or, for simpler understanding, whether it will close as a green, bullish or up candle, or bearish, red, down candle. All right. Number 2 is the anatomy of a candlestick. So each candle has 3 main parts. Before I go on, let's go back to the chart. Let me show you something on my chart. We have green and red, right? Red, bearish or down, green, bullish or up. So for example, what you are saying here is what? A red candle, one, or a bearish candle, or a down candle. And the next one beside it, this guy, the green, is what? A bearish, a bullish candle, or a up candle, or as you can see, a green candle, right? So let's look at this red, for example. The red candle, which is the bearish candle, always has is open at the top, right? It opens at the top right there and goes all the way down to the low, but came back and closed here. I will explain what happened at this place. Closed here, and then the bullish candle is the next one next to it. You can see that it has is open at the bottom, and of course it went down here but didn't stop there. This is the low of the candle, and then it went all the way up to this high and came back and closed. All right, there is a thing they call so that's the open, close, high and low of a candle. Straightforward. Number two is the anatomy of a candlestick. Each candlestick now have whether bullish or bearish, whether blue, whether green or red, whether whatever you are saying, they have their characteristics. Let's look at the characteristics of these things. Number one is the body. What you can see here, this red that is full and this green that is full, these are body of the candle. All right, this is the thick part of the candle. It represents the price range between open and close. Straightforward. The next thing, the second characteristic of a candle is the wick of the candle. For this one, it has a wick on top. Let me zoom in well so that you can see. Let me remove this, my guy. You see this green part? That is a wick. You see these two at the bottom too? These are wicks. This one has its own, this one has its own. The wick or the shadow, these are the thin lines above or below the body, showing the highest and lowest prices reached. Simple as ABC. Now, highest, in this case, this one reached here. What did I say the last one? But it did not what? It did not close there, but it reached there, right? It reached up here. Then low here, but it did not close. It opened for the green candle. It opened here, went low, but came back, went high, and came to close here. That's why it left weak in those areas. Next, we have color. A green candle is, I already explained this over and over. A green candle is bullish, which means that price went up, and a red candle is bearish, which means that price went down. Simple. So let's take an example. Let me delete this guy. Get out. YouTube. Get out. No. Delete. Come on now, we are wasting our time. Delete. So imagine this line is 10, right? So imagine a store sells rice at $10 in the morning, and then it open. Yeah, it's open. Let's take open. We already have action. Then by noon the price dropped to 8. 8 is lower than 10, so it went like this, right? When it was going down, the color will be what? What's the color of a candle going down? Red, right? Then it now rises to 12. And when it started to go, What happens when it goes to 12? You know, this place was 10, right? It goes to 12. The color of the candle will be what? Green. But where it's left behind, what's going to happen there? There's going to be a wick. Because what? It has gone to that area before. But it has not closed yet too. This shop has not closed. They now say, but finally settling at 11 in the evening. Settled where? 11 in the evening. This is 12. 11 like this. Bam. What happens to where it went? It's going to leave what? Shadow behind, right? This will be a green, like I represented it, with wicks extending from 8 to 12. You should understand that by now. Simple as A, B, C. You know I got you. So number 3, let's look at candle patterns and market sentiment. There are a lot of candle patterns, but we are going to look at just 3 simple candle patterns, right? But let's talk about something first. Back to the chart. A bullish candle, anytime you see bullish candles, it means that the buyers are in power. Like from here to this place, it was all bullish. The buyers were dominating the market, meaning that prices went up. But anytime, ladies and gentlemen, that you see red candles, bearish candles, what does it mean? It means that the prices is going down and the sellers are in absolute control. That is that. So some important candle formation, like I said, there are a lot of candle formation, but some important ones. Number 1 is the doji. Now this is 4 hours. This is represented 4 hours. Whether it is long or small or big or whatever, they are all in the same time frame, but they have different characteristics. But this one looks strange. No, I don't want you green again. We are done with that example. So this one, this green in the middle of this red, this guy looks strange. Why? The body is small and it has longer wick than the body at the top and at the bottom. You can see it, guys, right? I'm zooming, that's why you can see it like this. So small body, long wick, that's how you recognize a doji. And then another one is the bullish engulfing candle. The bullish engulfing candle, the definition is a big candle that swallows the previous one, which can signal trend reversal. So this big candle swallowed this one up, which can signify trend reversal. All right. Then we have what we call the hammer and shooting star. The characteristic also is that a long lower wick or upper wick, which can show rejection of price. So let's see, this one has a long lower wick. Let's find the one that has a long upper wick. I think I saw one earlier. Long upper wick. See that? This long upper wick. They are usually at the top of a trend. All right. Yeah, see that guy. Let me show you this one. This one. Long upper wick. All right. They usually signify what? Rejection. So these patterns help trader to predict future price movement and decide when to enter or exit a trade. Moving on is the time frame. You know, at the beginning of this, I told you to pay attention to what I was saying about time, right? Time frames and candlestick chart. Each candle represents a specific time frame. It could be 1 minute, 1 hour, 1 day. I've mentioned that in our course earlier. So smaller time frame like 1 minute or 5 minutes may it could show more details, but there's a lot of noise. There's a lot of noise going on lower time frame. While on higher time frame we have 1 hour, 4 hour, 1 day, blah blah blah. These ones, they would establish trend, because whatever happens on the bigger time frame is usually the most important things going on. Why the smaller time frame too can indicate some signs. You want to trust the higher time frame more. All right, so this is what I want you to do. On your MT5, go there, find candlestick charts and analyze the last 5 candles on any time frame of your choosing. Then identify which one is bullish, which one is bearish, and then which one is an indecision candle. I'm going to have you point that out. You can take a screenshot, note them down. We are going to discuss that when we have our nice next live session. All right, so I want you to take this home. Number 1, candlesticks tells you market sentiment. Number 2, the body, wick and color gives clues about price movement. Number 3, patterns like doji, engulfing or hammer helps you predict trends. And lastly, different time frames tell different stories. That's that on this session. Next, we are going to be looking at support and resistance to help you understand market structure even better. I know, go through this over and over. Whatever you don't understand, write them down, send your questions to me. I know you are better now than you were a week ago. And then I'll see you on the next one. Cheers.